Hello and welcome. Great to have your company on Kalkine TV. I'm Holly and you're watching The Buzzing Trends. Today we're looking at two ASX shares that investors can consider buying in January of 2022. The year 2021 is finally behind us and investors are now looking to devise new market strategies to pick the best stocks on the ASX 200 and to reap those rich dividends. So this is the time when those investors will be reshuffling their investment portfolios by looking at stocks with higher growth potential and dividend-paying capacities. So that said, here are two ASX shares that could be exciting buys for this January. And the first one is one of the big four, Westpac. Recently, the APRA has warned the bank and two others to lift their performance in some multi-asset investments as it forces the businesses to improve, merge or shut. The companies are among 8 that have more than half their multi-asset choice retirement savings plan delivering significantly poor returns, according to the APRA. They also said fees and costs are considerably higher in choice plans than default options without any obvious benefit for workers' savings. Looking now at Westpac's share price and financial performance, they've witnessed a significant fall in the past 2 months following the release of the full-year results. The share price fell as the earnings showed a much weaker than expected margin outlook on account of aggressive home loan competition. So the shock could be a good buy due to a significant share price pullback. In the financial year 21, Westpac's board decided to pay a dividend of 1.18 Australian per share. Meanwhile, the bank also released more capital to its shareholders via an off-market share buyback of up to 3.5 billion Australian dollars. After this buyback, the company expects to have a strong capital position to respond to uncertainties, support growth and its customers. In the past year, it's given a return of nearly 9%. And Westpac stock is currently trading at 21.65 on the ASX. Next, Kogan Com, the online retail company. Kogan recently completed a domain deal, which is linked to a future in the crypto space. A seemingly low-key phrased $5.2 million transaction gives Kogan an indirect play in the world of cryptocurrencies as they've made a roundabout deal with the Canadian exchange BitBuy that will see it marketing the platform's Australian launch. The key elements of the agreement include the transfer of the domain as well as an advertising arrangement whereby Kogan Com will provide marketing support to BitBuy's future launch in the Australian market. And looking at Kogan's share price and financial performance, in the past 1 year, the company's share price has fallen nearly 55%. The massive sell-off was due to inventory management issues. The e-commerce company recorded excessive inventory levels in the recent past. However, they might have recovered owing to a healthy Christmas and Boxing Day shopping period, which is expected to have leaned out the company's inventory. Kogan Com expects to achieve over $3 billion in annual gross sales by the financial year 2026 and a compound growth annual rate of 20% over this 5-year period to reach that target. In the first 4 months of the financial year 22, it's seen a strong performance from Kogan Marketplace and Kogan First, with the total gross sales, including Mighty Ape, up 19.2% to $432.7 million. Kogan stock is currently trading at a price of 8.46 on the ASX. Well, that is all for now, but we'll be back next time with more buzzing trends to share the latest market insights with you. Till then, stay tuned with Kalkine TV for more stock, business and economy-related hot trends. Holly Shields signing off.